Video is sponsored by the crypto platform BlockFi. Get paid interest on your cryptocurrency and receive up to $250 totally for free when you deposit money with BlockFi. Go to metkevin.com/BF. BF as in BlockFi. metkevin.com/BF. Hey everyone, me Kevin here. In this video, I want to talk to you about a relationship that I'm noticing between the pricing of cryptocurrency assets and something that you ought to know, especially if you are trading cryptocurrency assets. Now keep in mind, I specifically am saying trading here because you are either a hodler or you're a trader, generally, or you lucked into lots of money when it comes to cryptocurrency assets. And the reason I want to make that clear is if you're a hodler, you probably don't care about this. You're just gonna keep buying as it dips. And that's fine. I have a portion of my portfolio that's cryptocurrency hodl. It's all Bitcoin. I'm considering getting into a dip here on Ethereum as a hodl position, but I did have a trader position in Bitcoin, and I want to show you something that I said on January 6th, and then I'm going to show you something about why I said this and a trend that I noticed on the Bloomberg terminal, okay? But first, let me show you this. So this video that I'm pulling up right here, this is a video from January 6th. You can see it right here. What's crazy is this was the day of the Capitol riots, except this was our course member live stream before I started streaming the Capitol riots. I wore this suit in the 10-hour live stream that you could still see by going to YouTube, which is crazy. If you type in Meet Kevin Capitol Riots, you will see this 10-hour live stream. It has 1 million views of me basically covering the entire Capitol riots. It is a crazy day. Even though the thumbnail is a blue suit, you could see that it's the same green suit here. The reason I'm saying this is because this was filmed on January 6th, and it's really, really eerie looking back to this. But just listen to this for a brief moment here. I'm gonna hide my current self here for a moment. Give this a listen for like 20, 30 seconds here. Watch this. This is when I wanna sell Bitcoin. April 13th to 15th, tax time, okay? So I'm gonna put that on my calendar. Okay, pause there. So in this video, I explain why I was considering selling Bitcoin on April 13th. And I'm going to explain that to you right now, at least in terms of my trader position, not my hodl position. Keep in mind, that is the course member live stream. Now, what's really, really crazy about this timing is take a look at this, folks. April 13th is right there. Literally right between the 12th to the 14th, the peak here. Now, I mentioned in the video tax time. Now, that was sort of an extra little note. Sometimes people sell cryptocurrency assets to pay their taxes, but taxes got delayed. That wasn't the big crux of the video. In fact, the big crux of our course member live stream here was actually what's on screen right here, which if you look closely, it's the US Bureau of Labor Statistics, that darn consumer price index thing that everybody hates. Look, everybody watching this video is probably rolling their eyes like, oh my gosh, nobody believes the CPI. The CPI is garbage. Look, I agree with you. I totally think the CPI misses a ton of stuff. Stocks going to the moon, housing going to the moon, lumber, HVAC material, copper, wiring, all this stuff's up like 50%, and they mean to tell us there's no inflation, right? It's a bunch of fugazi, the CPI thing. A lot of people don't believe in the CPI thing. But why did I pick? And I explain this in an over 1 hour live stream here, which we cover other things, obviously, in the course member live streams as well. But I'm going to give you an update summary here, and I'm going to show you what I just noticed in the Bloomberg terminal, which is absolutely crazy. But one of the reasons I picked April 13th was because that's the morning of CPI data that came out on April 13th for March. And I thought back in January, if we get the stimulus package passed by March, we start getting that inflation data showing up in March, it's entirely possible that using that CPI, if that CPI data comes in not as high as expected, Bitcoin could begin to trend down. Even though many of us don't believe in the CPI data, if we start seeing CPI coming in softer, even if it's manipulated, if it's coming in softer than we expect, as a trader, it could affect Bitcoin and cryptocurrency prices. Now, we had obviously the Coinbase pump, which happened the very next day, April 14th as well, and then when Coinbase missed, things softened. But I wanted to try to see if there was a longer-term relationship between the CPI and what can be affected by the CPI, which I think the best measure for inflation or people's inflation expectations is actually the 10-year Treasury. And so I wanted to see the relationship between the 10-year Treasury and the trends in Bitcoin. And this I found was very interesting. So what I did was I took a chart on the Bloomberg terminal, which I'm going to show you in a moment, and I charted the 10-year Treasury this year, so year to date. And we know it's gone up. And at one point, starting in February, it started going up very sharply. And lately, it's kind of been trending down a little bit. Well, interestingly, so have cryptos. Cryptos have performed extremely well at the first part of the year. Now they're trending down a little bit. Again, I want to be extremely clear before I show you this chart. I'm not doing this for hodlers. I'm not trying to like fearmonger people out of Bitcoin. I want to buy more Bitcoin and I want to buy more Ethereum. I want to make that very, very clear. But if you're a trader, I think this really, or somebody looking at short-term signals, while I can't give you guarantees that this works, this is just an interesting pattern that I've noticed. When our CPI data comes in, short of high expectations, everybody's prepping for, oh my gosh, CPI is going to come in crazy. And then when it didn't come in that crazy in March, we started seeing treasury yields go down. And now we're starting to see inflation expectations in the bond market go down. And what's happening with crypto? Crypto prices are going down. Even today, they've fallen a chunk today. Take a look at this chart. Let the chart do the talking here, okay? So I'm gonna just shut up. Look at the chart. This shaded line, just to explain it here, the white line, this white line and everything below the white line, this is the US 10-year right here. The blue line is Bitcoin. And this is all normalized to a factor of 100. So they both start out at 100, and then we can kind of see their change over time here, right? Look at this near perfect tracking in January. Almost perfect tracking in January. Scary. Then we start getting inflation expectations increase. Here you actually see Bitcoin's a little bit more reactive, and Bitcoin reacts quicker than the inflation, or I should say the 10-year Treasury prices in inflation. But both of them basically go from being totally matched around January 28th, right around here, to totally matched again March 23rd on the same trajectory. Now we had our April 13th peak right here, and the Coinbase hype happened right here at this sort of peak point here. So in my opinion, it's possible this sort of extra bump here was because of the sort of Coinbase momentum and hype and euphoria and all that. But take a look what's happening again. They're on the same collision course of aligning again, which is really interesting how these two are trending together. Now, so far, this relationship has really only been very well connected year to date. If I zoom out, it gets a little bit more unclear, but we haven't also really seen the mega run in cryptocurrency until kind of like December and the start of this year. So really, it seems like from December to now, we have this really bizarre relationship between the 10-year and Bitcoin, but also the relationship with CPI data and the 10-year. And so this is why when I did that course member live stream, which remember, if you want to join any of my programs, there's a link down below. I plan on having that expire towards the end of this month, maybe like the first week of May. I'm still deciding, depends on when the marketing is ready. And take a look at that. Any of the programs you join, link down below, whether you get the bundles or whatever, you get access to all of not only my live stream archives, so you could go back to that video on January 6th if you wanted to. You could go back to any of my archives or my fundamental analyses, like my Palantirs or whatever, all the videos that aren't released publicly, the really nitty-gritty stuff. But you also get access to all the lectures, and you get lifetime access to all those lectures and the new ones that I add. So consider checking that out via the link down below and use that coupon code. You could also bundle up. Now, the other thing that's worth mentioning here is a lot of folks are discussing the possibility of this September crash in cryptocurrencies, possibly because of something known as the start of a crypto winter that oftentimes happens a certain amount of months after the Bitcoin halving. And this is where there could potentially be this crypto winter, which some people say lasts a winter, it could last 6 months, some people say it could last 2 or 3 years, where basically cryptocurrency prices could sell down 70 to 90%, Who knows if it'll be that severe, but that there could be some kind of crash coming, that it could last, and then essentially it'll come back, and when it comes back, it could go to $100,000, $300,000, $400,000, $500,000. Who knows? There's a lot of talk about this crypto winter. Because there's so much talk about this crypto winter, either coming in September, so in the fall or in the winter, in my opinion, it wouldn't be shocking for, because of people's expectations of this coming, us to start seeing some potential selling pressure before that, kind of like in the spring or summer, which potentially compounds what we're seeing now in this relationship with the 10-year. Now, I'm not 100% confident in these things. I personally have to say I missed my own advice by a week, which I'm really disappointed about, because on my calendar, I will show you my calendar for April 13th. Take a look at this. On April 13th, this is what was on my calendar. I had the Kevin O'Leary interview at 8 and CPI data coming out at 5:30 a.m., which I woke up for and I covered live. And I wrote on there, sell Bitcoin. Except I didn't do it. I was a baby. I didn't do it. I didn't sell my trader position that day. I didn't listen to my own advice, and I regret that. Instead, I ended up selling about $500,000 worth of Bitcoin on April 20th, 420, which was also when I did my big options purchase. In case you're not familiar with that options purchase, that's when I basically sold about $9 million worth of stocks, bought about $4 million worth of options that have the control of about $12 million in equivalent share value. So as long as I'm right with my options bet, I actually have more exposure to the market than not. And I also plan on buying into these crypto dips. But I did wait until Bitcoin was somewhere around $54,000 to sell, which does put me pretty profitable on my Bitcoin, since I had been buying it since about $32,000 to $35,000 on average. But this was a trade. I went into this as a trade. I left it very profitably. If I'd followed my written strategy, which is what I teach in my programs, I would have done even better. I don't know why I didn't, but I waited a week. Oh well. Should have listened to myself. That happens sometimes. Sometimes we let impatience, or I should say, oh, well, it could keep running, get to the best of us, right? So anyway, following the strategy, very, very important. But I do think that going forward, there's a continued opportunity to potentially see on the CPI release dates additional downward pressure in 10-year treasury yields, which if Bitcoin tracks down with it, maybe cryptocurrencies could continue to sell down and create more of a buying opportunity. For me, my written strategy is to continue to buy cryptos, at least Bitcoin, somewhere between $35,000 to $44,000. That's my ideal. Obviously, if I can get it cheaper than this range, I'll be more interested in loading the boat. I am also interested in diversifying into Ethereum. So if we start hitting those prices in BTC, I'll probably also be buying Ethereum. And of course, if I do, I'll be sending out alerts for exactly what I buy and when in the programs. If you want the buy-sell alerts, I do mention those in the Stocks and Psychology of Money program, linked down below. And teach you how to build long-term wealth with some fundamental strategies. Okay, so this right here is the schedule for consumer price releases. I personally recommend putting these dates on your calendar. Again, even if you think these CPI releases are fugazi, bullcrap, whatever, I agree with you. But at least put these dates on your calendar. My expectation was slightly off over here. I put down 2.4%, ended up being about it was either 2.5 or 2.6%. It was pretty dang close, but it was nowhere near that 3% some folks were concerned might come in. And the month-over-month inflation increase was 0.6%, nowhere near that 1% a lot of folks were concerned might happen. This was one of the reasons we started seeing the treasury market kind of, the yields start selling down or lower in the treasury market. We do expect bigger numbers coming in April, May, but if these don't come in as high as expected on month-to-month bases, we continue to see that treasury yield decline. And if it's true that Bitcoin's tracking the treasury yield, then it's possible that Bitcoin could also follow that treasury yield down a little bit, or even precede it, sort of predict it a little bit. Not sure. It's an interesting connection that I found. And it's totally based in exactly what I was talking about back on January 6th when I first made my written strategy. Again, I was off by a week on my execution, but my strategy was accurate. So anyway, we'll see how things go. I will continue to track 10-year treasuries, and I'm looking forward to buying a lot more of a hodl position in cryptos, especially now that I have absolutely zero margin, which if you want to learn more about that, where I explain what I bought and sort of or why I sold and why I bought what I did, type this into YouTube. Type in Meet Kevin, the truth about my margin. So if you type in Meet Kevin, the truth about margin, you'll see this video that's called Revealing the Truth About My Stock Debt, What Just Happened. This is a very, very important video to watch right here from 4 days ago. And that'll sort of explain some of the things that I just did. Anyway, thank you so much for watching this video and my thoughts here, my connections. Interested to hear what your thoughts are. And folks, we'll see you in the next one.